Good morning, grade 10s. Welcome to our business studies class. Today we are still looking at your forms of ownerships, but we are looking at part 5s of the form of ownership basically. Welcome to our lesson 5 for those who are just joining us today. So basically, boys and girls, today we'll be looking at your close corporations and characteristics of your close corporations, your advantages and your disadvantages of your close corporations, and also later today we'll be also looking at your private companies. Before that, boys and girls, I want us to look at this learning outcomes, guys. These learning outcomes, they still apply to everyone, basically, boys and girls, right? You still need to be able to explain or discuss or describe the advantages and the disadvantages of your cooperatives. When we get to cooperatives, probably tomorrow, we're going to touch on cooperatives. You also need to be able to select the best form of ownership and justify the reason for your selection. And that, guys, you'll see it when we do scenarios or case studies. You also need to identify forms of ownership from a given case study or scenarios, cartoons or pictures. Also, you need to outline different types of cooperatives, so you don't have to worry about cooperatives. We are, however, going to look at those tomorrow. You need to be able to explain or discuss or describe the characteristics and advantages or disadvantages of each form of ownership and define a different forms of ownership, basically. As I told you today, that today we'll be looking at our close corporations. That's what we'll be looking at today, basically. Welcome to those who have just joined us, guys. Welcome to our class. Now, what is a close corporation? A close corporation is the business that is owned by members and can have between 1 and 10. So it's not different from partnership. Can you see? It's also a business, but a close corporation can have one person and also can have more than one people. So now it's a bit tricky because now it says 1 and 10. Whereas a sole proprietor is only one person, whereas a partnership is more than two people or more than one people or person. But now this close cooperation, it's the combination of your sole proprietor and your partnerships, right? In order for us to classify whether is it a cooperation, a close cooperation or not, we need to be able to know its characteristics. So we can only know the characteristics if we know that it's a close cooperation, your CC, basically. Now let's look at your characteristics of your close cooperation. Can have a minimum of 1 and a maximum of 10 people who share the common goal. So the aim here, it's the people that share what? The common goal. The name must end with a suffix CC. That's where we would see that it's a close cooperation. Members of the close cooperation both owned and control the business. So they both own. It can be one member, but they own and control. Right. Profits are shared in a proportion to the members' interests in the CC. So we know that profits are shared in proportion. Profits are shared in proportion. A CC has its own legal personality and therefore has an unlimited continuity. So this one has the unlimited continuity, basically. Each member makes a contribution of some assets or services towards the corporation. So the member contributes some assets or service, right? It's very important. We contribute assets contribution of some assets and service. The word close means that all members are involved and participate in its management. So the word close, meaning that all, very important, all members are what? Are involved and participate in its management. So they are both involved and participating. All right, boys and girls, this is what we're going through for now. So, boys and girls, if a question comes and say classify on whether this is a close cooperation or not, you must know the characteristics of your close cooperation before you can do that. Without any of the characteristics, unfortunately, you won't be able to see on what form of ownership it is. So you must know the characteristics of each and every form of ownership that you are dealing with. We have dealt with a sole proprietor. We have dealt with a partnership. Today we'll be looking at close corporations and we'll be touching on some private companies if we still have time, basically. Right. Now, boys and girls, there are more characteristics of your close corporation. Basically, these are more. Other more characteristics pointers is members have unlimited liabilities except where the CC has had more than 10 members for the 6 months or longer. Very good. I mean, very important. So we know that they do have the unlimited liability, but now this overrides the unlimited liabilities because it says except. Okay, I need to do it with a red color because this is an exception. An exception meaning that look at this. It's an exception. Right. Now it says except what? Where the CC has had more 10 members for the 6 months or longer. Very important. They loved us in the question papers. They love these great tense. Please make sure that you actually understand these characteristics. Right. Auditing of books is optional as members only need an accounting officer to check the financial records. So we know that the auditing of books is optional, which means it's not a must, unlike the company. Under companies auditing of books, it is a must. You have to do it, like it or not. Transfer of members' interest must be approved by all members. So if one of the member in a CC wants to make any transfers and stuff like that, all the members that are involved must approve that. So the transfer of members' interest must be approved. So members' interest, must be approved by all CC members. Now, members of the CC are paid according to the percentage interest owned each. Very important. So your CC members will be paid according to the percentage interest each owned by members. Meaning that, let's say if one member owns 10,000, another member owns 1 million, and another member owns 750,000. Now we need to find a percentage in those, basically, right? And then we need to prorata or apportion, basically. But that is more of accounting. In business studies, you don't have to know how to calculate the percentage interest owned by each members. You just need to know the theory on how to form a close corporation, basically. Then if you're doing accounting, that's where they'll teach you how to calculate or how to account a close corporation. For now, remember, business studies, it's like as if you want to start your own business, right? Then obviously for calculations and stuff, you need to hire what? An accountant. These are just ideas and characteristics of your close corporation. That, okay, in order for you to have a close corporation, what are the things that you need to have or the things that you need to look at? Does it make sense? All right, let's move on, boys and girls. Now, I want us to look at the characteristics, at the advantages and disadvantages. All right, let's start with the advantages of a close corporation, boys and girls. But before I start that, I need my pen. Sorry about that, guys. Sorry about that. I was looking for my pen. My highlight, I want to change the color. Let me make it green. Perfect. Okay, now let's look at the advantages of the CC. A CC is a legal entity and it has continuous of existence. So it is a legal entity, basically. It's your legal entity, right? And also it has continuity. It has continuity. All right. A close corporation is easy to establish and operates because there are fewer legal requirements than companies. So basically here, it's easy to establish. Same as your partnership, same as your sole proprietor. Whereas partnership, you must have your partnership agreement. Even here, there are just few legal requirements than companies, whereas companies, it has many of the legal requirements. A closed corporation is not required to hold an AGM. That's another good thing. Not required. Not required to hold what? Your AGM. Meetings are not compulsory and can be held on an ad hoc basis. Now, when we speak about ad hoc basis, it's when you can have meetings where it's necessary or seasonally. That's the ad hoc basis, right? And it's not compulsory to host meetings or to have meetings in your CC. Members have limited liabilities. We know by now what does limited liability means, right? So that's very important, guys. So these are the things that you need to look at, boys and girls, when you are dealing with your close corporations, and also to see what are the good things of having a CC. Now let's look the bad things when it comes to a close corporation. What are the disadvantages of your close corporations? Now, when we look at your, okay, sorry about that. We are still on, yes, we are still on advantages, guys. We're not yet done with our advantages. Now, another advantage of a closed corporation is a closed corporation can be converted to a private company and members can become shareholders. Wow. Wow. That's very exciting. We know that CCs, they can be converted. It can be converted to a private company. And now those members, they can be shareholders. Remember what are shareholders? Are the people who invested to the company through shares, right? So that's a nice thing. We can convert our CC to a private company. The business rescue clause work to the advantage of the CC because it facilitates and rehabilitation of a CC is when financial distressed, basically. That's another important point, and I hope it makes sense, right? Transfer of ownership, it's easy as it can be transferred to an individual in all members agree. So if you want to transfer, I love this line, says transfer of ownership is easy, basically, right? That's what it means here, right? Perfect. Okay. There are no directors, therefore, no complex rules like companies where directors are subjected to more rules. So, no directors. No directors, no complex rules. So, we don't have any directors. No complex rules. Right. Closed corporation may be exempted by CIPC from auditing its financial statements, right? So it can be exempted by CIPC. Now, guys, you need to know what is a CIPC. Giving you a homework, please go find out about this acronym. Okay, I almost shouted the answer. But I'm giving you a homework. Tomorrow, first thing morning, I'm going to ask about CIPC. Please go find out about that. What does it mean when they say you are being exempted by CIPC from auditing its financial statements? So please find out about CIPC. You can Google, just let me know, and what does it stand for also, because that's an acronym basically, boys and girls. Okay, now let's look at the bad things about a closed corporation. What will demotivate people not to form a closed corporation? That's where we look at our disadvantages. When we look at our advantages, we say, what are the good things or what things that they can motivate people to have a closed corporation as a form of ownership? Now, the disadvantages of a closed corporation basically here, we know that limited growth and expansion since a CC cannot have more than 10 members. So there's a limited growth and expansion since a CC cannot have more than 10 members. So very important. Very important, guys. There is no growth. There is growth, but it's limited. Right. Okay. A member of a CC can be held personally liable for the losses of CC if the member acts incompetent. So if you act incompetent, you can be held personally liable for those losses that you have incurred, basically, boys and girls. Also, the audited financial statements may be required by applying for a loan. So your audited financial statement may be required when applying a loan, right? And remember, we said we don't have audited financial statements, but when you go apply for a loan for a funding, they'll need your audited financial statements. But in a CC, you can't have them because it's not a must to have your audited financial statements, basically. Right. All members must agree to dispose of a member's interest. This could make it difficult for members to leave the CC or to pay a member their portion. Right. Let's unpack this one, boys and girls, now. So now if you're a member, every member must agree. It's a must. Must agree must agree to dispose of a member's interest. This could make it difficult for a member to leave the CC or to pay a member their portion. That's a that's a disadvantage, because now if one member says they are leaving, or we dispose a member's interest, it's going to be difficult for us to pay the portion, because remember, this member that came to this CC contributed with some money or whatever thing that he brought to the business. Now you guys as remaining members must pay that person. Does it make sense? All right. Every member acts as an agent of the CC, and the CC is bound by the members' action. Very, very important. CC is bound. CC is bound by the members' action. That's what it means here, basically. All right. Let's look at more of your disadvantages when it comes to your close cooperation. Another bad thing about forming a close cooperation is that, boys and girls, it is not possible to sell a CC to a company, because companies cannot convert into CCs. We can only convert, you can only convert from a CC to a company, but a company cannot adjust and convert to CCs. So companies, very important, companies cannot be converted into CCs. A CC is tax on its income and standard tax of company, your CTC, your STC, based on the members' dividends or double taxation, right? So a close corporation will be taxed on your standard tax of company based on the members' dividends. You don't have to worry about this in terms of how do we do it. Only in accounting, you need to know how to calculate the tax and stuff like that. Remember, under business studies, we're just showing you how to form a CC and things that are looking good in a CC and things that are looking bad in a CC. All right, now I want us to touch on companies. We are going to finish them tomorrow. Private companies, to be specific, guys, it's another form of ownership. Remember, guys, a private company has between one or more shareholders. You can have up until so many shareholders in a company. You can even have million shareholders, basically. So it doesn't have a limited number where on how much shareholders you can have or one must have. Sorry, I don't know what's happening with my highlighter. The cursor, it seems like it's not moving. Okay, let me just highlight it again. Sorry, I need my highlighter. All right, so it's between. Okay, guys, I don't know what's happening with my cursor. Seems like it's acting now because I'm trying to highlight for you guys. Right, it can be a small or large company and it has one or more directors also. Even here, you must have one or more directors. All right, perfect. Now, let's look at the characteristics of a private company. How are we going to see that this is a private company? It needs a minimum of one shareholder. So, and there is no limit on number of shareholders. So you can have infinity shareholders. You can even have one, but it does not have any restriction in terms of how many shareholders can you have in the company. It requires one or more directors or more shareholders. We spoke about this point. It raises capital by issuing of shareholder shares. So we raise our capital by issuing shares. That's how we get our capital, or that's how we raise money. The company name ends with letter Pty Ltd. Very important. Very important. This one I need read because it's very important. How do you see your private company by Pty Limited, basically? Right. Investors put capital in to earn profit from shares because they get dividends, right? So the profit that they get, investors, it's your dividends. The company has a legal personality and well as unlimited continuity. Also, a private company is not allowed to sell shares to the public. So private company is not, only public company can be allowed to sell shares to the public, but a private company is not allowed. Shareholders have limited liability and separate legal entity. All right, more of the characteristics. Profits are shared in the form of dividends. So that's why I said, so profits are your dividends basically. So we call profits as dividends under companies. Register with the registrar of companies by drawing up the MOI, Memorandum of Incorporation. Remember your MOI, guys? We spoke about it last week. It's a document that sets the rules of the companies, right? And the code of conduct, basically, sort of like a code of conduct. Shareholders have the limited liability and will not lose their initial capital invested in the business if the business goes bankrupt. The Act imposed personal liability on the directors who are knowingly part of carrying on the business in reckless or fraudulent manner. This one is just says itself. Private company must prepare annual financial statement. Must. Here it's a must. Must prepare the annual financial statements and they must be audited too. Why this is important, guys? Because we know that majority of the private and public companies are listed on the JSE. So it's very important to prepare annual financial statement, but it's not required to lodge its financial statement with the commission. So it's not a must to launch, but you must prepare. But it's not a must to lodge them. Your annual financial statements need to be either audited or independently reviewed unless prescribed by regulation. So they need to be audited. Or they can be independently reviewed. All right. These are your characteristics, meaning these are the bad things when you are forming not bad things. Sorry, I'm still speaking about disadvantages. These are the things for you to see whether this is a private company or not. So in a scenario, they will throw in all these things. So you must understand each and every characteristic of a private company so that you can see, because if you know your characteristics, you can tell from a question paper or a scenario that is this a private company? Is this a partnership? Is this a CC? Is this a sole proprietor? So you must know the characteristics of each and every form of ownership. All right. All right. Perfect, boys and girls. That's for me today. Please, guys, feel free to ask any questions at nkosihector28@gmail.com if you've got any questions. You don't have to ask what we are currently busy with. You can even ask anything that is business studies related. From my side, guys, I say thank you. Have a lovely afternoon. Goodbye.